We're talking finance now, a slightly different way of looking at finance as well. And I'm very pleased to welcome back Payal Trehan, who is a partner, Senior Investment Strategist for the Michele Carby Practice. Feels a bit weird this. I feel like you were here very recently.
I was. Thank you for having me again.
Well, did you even go home?
Oh, I think I just kind of slept in
We've just been knocking around the office for a while.
Just a closet hole back there.
It's very comfortable and you're very welcome. Look, it's nice to see you. This is an interesting trend, and I know that Michael, who produces this show, got in touch and wanted to talk about this, and I'm kind of interested. So a new trend that's kind of shaping, I suppose, the future of investing in some ways. Young investors taking to the markets, but doing it very differently from previous generations. So here's the background. It's a recent WEF study, World Economic Forum study, survey. 30% of Gen Z, so that's the generation up to about 28 years old at the moment, something like that in theory. That's a bit of a movable feast, but let's take that. They've globally started investing in university or very early adulthood, rather than, I think it's something like 9% of Generation X, which is very firmly my generation, I should admit. Now, in the UAE, young investors are gravitating towards traditional safe haven assets like gold, very much in the headlines at the moment, but they're also using digital platforms like Baraka or Sawa to get a head start in the stock market. So why is that happening? What does it mean for the economy, for the average investor? That's why you're here. And it's yet another kind of theoretical discussion, kind of leaning on your expertise, Payal. But what is it about Gen Z that's getting them into investing early, or why?
I think this is such a cool topic. I'm going to start with that because I think it's just so important to talk about this right now.
It's a generational shift.
It is, absolutely is. And I think it's, there's a lot to learn from here as well for the previous generations. And I think kind of going back to why is this happening, I thought long and hard about this, right? And I think it comes down to two for me, and it's acceptance and access.
Okay.
Now, if you look at the acceptance side of things, I kind of go back to this, and I said this in the previous discussion as well, is in the pandemic era, what happened really was there was this cultural shift or this cultural acceptance that almost made it seem like investing became a acceptable way to start building wealth, right?
Okay.
And traditionally, if you think about it, our life path and career path has always been, for the previous generations, has always been quite decided, not really flexible, and I'd say linear. But now what we're seeing is life and career path is flexible, it's non-linear, and there's just a lot more acceptance. There's an acceptance for, okay, what's your career? And you might not be an investment banker. You might just be a financial social media influencer, and that is perfectly acceptable. So I think that's one. But I think what also feeds into that is the access. So all of a sudden now you have access to so much information. And I mean, look, I don't know the stats exactly, but I'm pretty sure if you did the stat and you looked at what was the active user subscribers for TikTok in 2020 versus what it is today, I know the number's probably about 140% increase, right?
Okay, makes sense.
Now, if you just put that into context, what you're basically saying is we now have that much more information available to us, which I would say, back in previous generations, you didn't. Your kind of source of information were your experts. Where'd you find these experts? You find them either at your university campuses, you find them either at your job, wherever you're working, who your line managers, who your mentor is, and so forth, or you seek a financial professional.
There's another one. We used to buy encyclopedias.
There you go.
Yeah.
There you go. I had a whole rack of them.
Yeah.
Yeah.
A to Z.
A to Z, all of them.
Did you actually read any of them?
I did. I had to because we didn't have the internet for school projects.
There you go. But that is a huge difference.
Massive, massive. So I think all of these things put together, it just allows for easier decision making. So it's access and acceptance.
Okay, so, I mean, the thing is, I relate to this story just as much as you do, but I think in a slightly different way. I mean, I was completely unaware of anything to do with money or investing for years. And it always seemed to me to be a dark, kind of mysterious world that other people did that.
Yeah.
Stockbroking, I kind of knew what it was, didn't really. it's still a bit of a dark art in some ways. But I was even advised at school that a potential path for me was the city. I went to school just outside of London, just east in a county called Essex, right? And it's half an hour, 40 minutes to the city of London where everything happens. Lloyd's of London, all of that. And I was told you could get into stockbroking, you could get into insurance. And I remember sitting there thinking, you don't know me, because that's absolutely not me. But it wasn't really for me. Maybe it was fear of the unknown. Maybe it was just not my thing. But then later on, I spent 11 years working for a personal finance publication. So I'm in the sort of media industry. And I wonder if that was kind of me catching up, you know?
It probably is, Tim. I mean,
Could be.
because at the end of the day, when you talk about any investment decision, what is it? It's reading and making an informed decision.
Exactly.
And I think you can relate that to absolutely every aspect of your life. You know, something as simple as, should I buy this property today or not, is an investment decision. Should I spend money on this fancy holiday or not, is to a certain extent a saving decision, ergo an investment decision. So money decisions, as I put them, should never be, you should never create too much of a complexity around them, right? Read and get informed and then make the decision, just like you would at any other decision in your life. But I think what's certainly, even in your case, because I can relate to that, right, is if you kind of look back previously, what was taught to us were the traditional fundamentals. You go to school, you get a job, you save money, you try and buy a property as soon as you can, you step up the property ladder, you know, and that was it. But nowadays, when you sit down, you know, with the Gen Z, there is so much more of a sophisticated discussion around, well, I don't need the property. I'd much rather have my money invested in the markets. It seems like it's going to do a lot more for me than rising property. There are healthy debates around, well, honestly, in the last 10 years, you know, property prices in the UK haven't risen. But if I just put that same money into something like, let's talk about gold, because that's the topic here. If I would have put that over there, I would have probably made a much, much, much larger return, and my money's liquid. So you're starting to hear more of these debates come to the forefront. And this comes from information and education, which I guess is just more accessible to them.
It's also attitude to the information that you receive, because it's straight to your phone. And it used to be that you would sort of compartmentalize things. And I see this with my father, who does things in a very specific way. He's an older man, of course, but you know, there's a time to do the tax return. There's a time to do this. There's a time to take care of whatever investments or to get the bank account sorted, whatever. Whereas now, attitudes are much more, I could do that quickly now on the phone, then I could be doing something else. It's a much more multitasky kind of environment.
Exactly.
And I think Gen Z are very happy with that. Their brains maybe work differently.
Yeah.
You're also younger, so you know, there's less clutter.
Exactly. And I think you're absolutely right. I think what we're seeing now is the ability to kind of really accept that instant gratification. It's like, you know, if I can do this really quickly, I get it done, and then I'll move on to the next thing. So it's almost that follow through is so much more faster. Whereas back in the day, you know, for instance, buying a property or setting up a savings account felt like a big task, right? Felt like you needed a big gold checkpoint at the end that, yes, I did this.
Well, it was a big task back in the day.
Exactly.
It was a few trips backwards and forwards to set up a bank account.
Yeah.
I set up one in the summer, and I went in, spent half an hour. They went through all the checks. It was done.
Yeah.
And I thought, that was easy.
I know. And nowadays you also get told, you know, you could do this online. And you're almost thinking, yes, I could have done this online. But you see, Gen Z knows all about this. And they try to live majority of their life online.
You know, we're like two old codgers here, and you're a lot younger than me. But it is interesting, and there are distinct kind of lines, demarcation lines between the way the generations deal with their daily lives. That much, I think, is fair.
Yes.
And this is all good background for this discussion, I think. But do you know another thing? I remember that when Wi-Fi really started to take a hold in offices, which is kind of early 2000s. 2005, most people were starting to get Wi-Fi in the office. And I remember we had like a little sofa set, and people were starting to take the sofa, lie on the sofa with a laptop. And I was a bit like, get to your desk and sit and work properly. But why was I like that? And, that has completely changed. So that all kind of drives this. Look, let's get slightly deeper into the topic. In the Emirates, young investors favouring gold.
Yeah.
Lots of people at the moment. It's very much in the headlines. Even after the correction of the last few days, it's kind of the topic on everybody's lips. Silver is there or thereabouts, even though that's corrected maybe slightly more. But is there an element of fear of missing out here, which is something that should set up a few warning bells, I guess, with somebody like you?
Yeah. I mean, look, the FOMO trade was probably the theme for 2024, 2025.
Probably.
It really was. It's all everyone spoke about.
Yeah.
I would say, though, that where amidst any global uncertainty, right, be it in any form, the natural response is always to flock to safe havens.
Sure.
Now, we're kind of faced with this situation where we've just seen, and we discussed this last time as well, we've just seen so much uncertainty happen so fast at such a large pace. So the natural response to this was, oh my God, let's absolutely flock towards gold and let's start putting that. Now, I do want to take a moment to kind of trail back and look at fundamentally why has gold moved. And if you kind of look back, for the last over 50 years, there was only one buyer for gold, and it was your institutional investor.
Sure.
And these are the clients that played off, Fed real rates, looking at them and deciding, do I buy or sell? In 2022, you had a second category of client added, which was your central banks. Now, central banks started ramping up on gold, and that pushed it up. Last year, what we noticed was majority of portfolios that are held in U.S. assets. Now, I'm talking about a number that's $60 trillion. Majority of this was then decided to say, okay, out of this, let's say 45% of my portfolio is U.S. assets. I don't think the U.S. is going anywhere. I still think it's going to be the largest liquid market and the biggest capital creation market, but I'm okay to notch down from 45% to 43%. Now, if that 2% shifted into commodities, it would actually, mathematically, it could ramp up the gold price to about $6,000. This is just on a mathematical formula.
Right.
Now, a lot of this has been caught on by what you call your retail investors, which Gen Z forms a big part of. So a lot of these retail investors have access to this information, and they're looking at this and saying, oh, well, if I'm looking at that price follow through to about $6,000, then really I should get in. I should get in at the 1,700, at the 3,500. Even if it drops a bit, there's still a rally to go through. So a lot of this is kind of fed in by the fact that we have seen fundamental shifts in buying markets, and all that's happened is Gen Z, as you call it, just has access to that information. And they're catching on to this. Now, add to this your global uncertainty. You've got, a lot of geopolitical tension around. There's this big argument about de-dollarization or a move to fiat currencies and all of that stuff. I think all of this just creates this perfect storm for, let me start buying gold, because it's the headline news right now.
It's a really good point. It's interesting that you say that, and you're back at acceptance and access, because you have access. You can buy gold through your savings account now with your bank app very easily. And if you accept that that's the way to do it, okay, so I think you make a really good point. But it is apps like Baraka or Sawa, or there are a million other ones, I guess, that are making it easier to invest. You don't need a broker. You don't need loads of money to put into that.
Yeah.
So those kinds of things have really changed the investment landscape. The other side of it is they're pretty easy to use.
Yeah, they are. And that's exactly it. When you lower the entry barriers into anything, it all of a sudden becomes that much more appealing and attractive. You see, it kind of goes back to, again, in a previous world, if you wanted to make these decisions, you would have thought, I need to sit with a professional, I need to get the guided knowledge, which I still think you do, but I need to get the guided knowledge. They need to set me up with an account, and only then. So all of this could take quite a bit of a while, quite a bit of your time out of your daily routine. It could also probably mean higher barriers to entry. But with apps like Baraka and Sarwa, what have happened is you don't need a lot of money to go in. So it's a lower cost platform, but it's also a lower capital requirement platform. There are arguably certain measures to safeguard you from where you'd invest. So there's no leveraging or per se. So that does kind of create a little bit of a safety net. But I think what's most important is it just increases that follow through. I've thought about it, I've downloaded the app. Next thing I know, I'm registering and I'm doing all of that. I don't have time to and about my decision anymore.
Yeah, well, that's exactly what I'm thinking, because when it comes to hitting the button,
Yeah,
buy,
yeah,
sell,
yeah.
that's I'm reticent. Maybe I'm more reticent. Maybe that's just an age thing. I'm not sure, but I can see where you're headed. Do you think that investing in apps via apps like this has any kind of risks that are unique to the online world?
Yes, I do. And I am very cognizant about talking to clients and children of clients about it all the time. Look, what you have to understand is when you download these apps, they're not geared to give you financial advice, right? A lot of them are built to give you AI modeling tools that will give you financial tips and give you stock indicators and all of that stuff. But what you have to be aware of is a lot of that is also driven by algo trading that drives off news. So if gold is, headline news, it is going to pop up on your indicator quite a bit.
For sure.
The fear you fall into is, are you buying headline news or are you buying something that fundamentally you have done the research, you've done that follow research through, you've done your due diligence, you understand about it. That's one. The second one for me is there is sometimes this risk of I've bought in at a price and then all of a sudden, especially something like gold, it swings in super cycles, right? So
Yeah.
commodities always move in super cycles. So the price volatility is actually quite high. Now, if you've been caught in that position where you've picked it up and all of a sudden you've seen a swing really high, there is a little bit of this false confidence that builds up that says, oh, I'm a great picker and I can keep doing this. And then before you know it, it creates a certain amount of arrogance and ignorance. And that is a trap that is very, very scary for disciplined investing. And I always say this, the thief to disciplined investing is arrogance and ignorance.
It's a heady mix, isn't it? Yeah, okay. So there are lessons, I suppose, that the older generation can take from Gen Z. We could be a little bit more, I don't know, in the modern world, I suppose is one way of putting it. But by the same token, what you're kind of advising there is caution more than anything, doing your research, understanding what you're doing, trying to keep a lid on, look at me, when you may not be all that. So, Gen Z can take lessons from Gen X as well. You're not invincible. You should diversify. You need to do your research.
Yeah, and your emergency funds. Are you caught up in a situation where if you have because that's the one thing I do find about Gen Z is they have this all-in attitude. It's let me go all in. And you kind of have to sit back and say, no, let me rein you back a little bit.
That's the invincibility of youth.
That's
I was bulletproof for years, and then I wasn't.
Exactly.
Yeah.
And that's kind of where you turn around to them and say, look, no, you need to everything in moderation is perfect.
Right. Okay. How do you think financial institutions should be looking at this? I mean, what kind of response do you see that you like? And maybe what kind of response do you see that you're not so keen on?
I already like where financial institutions are headed, which is they've become a little more informational as opposed to you no longer now find a lot of experts that are trying to pitch a product, right? You generally find experts that are now involved in, let me educate you, whether you do this through me, whether you do it on your own. The idea over here is education, and I'm seeing a lot more of that. And I think that is a response to financial institutions also now catching on to the fact that you now have a savvy investor. You now have somebody that has come armed with the knowledge and is sitting in front of you and isn't no longer just here to hear from you, but have their own opinions and want you to consider that in their financial modeling. So I think we are seeing that. We're also seeing a lot of financial institutions have jumped onto social media. You start seeing a lot of them on Instagram, TikTok, LinkedIn. So I think all of these things, they are definitely changing. I still think there is room to do a lot more. But I would like to see a little bit more integration of, maybe internships at the school level as opposed to just because a lot of kids right now aren't even opting the university route, Tim. A lot of kids right now are actually, right after school, they've decided, no, this is a career I like. So I would like to see financial institutions kind of integrate a little bit more at the school level and start to say, okay, well, come in for an internship and do a little bit of a spring insight or a summer insight term with us.
Okay, and I guess as well, maybe building financial education into curriculums a little
That would
bit
be
more,
brilliant.
which would be a great thing because
Yeah.
it's going to be a major part of your life, whether you like it or not. Money ain't going anywhere right now. I suppose simplification is a good thing. Inviting people in is a good thing, but oversimplification
Can be dangerous.
breeds a false sense of security potentially. So again, it's you've got the acceptance, you've got the access, but think about the research. Final thing, we've got. I have to give you 30 seconds for this, but for somebody starting out, somebody thinking, look, I want to get into online investing, I want to look after myself, I want to do this. What's the smart strategy?
Do your research. Always do your research. And it's like I said before as well. Don't buy headlines, but buy fundamentally good businesses. Now, if you think the environment is right for commodities like gold, silver, understand what are you buying. Because I see a lot of people buying gold, but not a lot of people understand that gold is not it doesn't earn money. Gold as a commodity just kind of sits there as a store of value. So do your research on all of these aspects and then build a portfolio for yourself.
Okay, and what should you avoid, very briefly?
I would avoid anything that's headline or hype. At the moment, for me, that would probably be don't buy into the crypto dip trap right now.
Okay, good advice, Payal. I appreciate that. Partner, Senior Investment Strategist for the Michele Carby Practice. I'll get your room ready so when we get you in 2 days' time, you can
Perfect.
just stay. But nice to see you. Thanks for coming.
Thank you, Tim.
This is Mirror Business FM.